All right, now to our first conversation. Well, the Naira is back in the news again. Yesterday, the Central Bank of Nigeria directed deposit money banks to remove the rate cap on the Naira, the official investors and exporters window of the foreign exchange market, to allow for a free float of the national currency against the dollar and other global currencies. Well, let's gauge the positives and expected negatives from this. Joining me now is Mr. Ayodeji Ebo, MD, Optimus by Afrinvest. Join us via Zoom. Great to have you on the show. Good morning.
Good morning, and thanks for having me.
So I guess this is what, experts and economists have been clamoring for, but this is good news, but it does come with some, negatives. Tell us, how much pain can we expect from this while telling us, the positives?
Okay, thanks. I think it is really a good move, and like you rightly said, is what we have been clamoring for, because there's the saying that market will always win. So what we currently have is allowing markets, a willing buyer, willing seller, to prevail, and there will always be a price. There's what we call price discovery. Over time, initially, we may see some knee-jerk reaction, everybody being skeptical, both the buyer, both the seller, trying to see where the floor, where there will be a middle point, is expected in any market. And over time, once everyone sees there's confidence, what we would expect to see is that we would begin to see more inflow channeled through the official market. So you, staying with your question, where you say starting with the pain, some of the initial pain that will is that we may see an adjustment in the fuel price. Thankfully, the interview before my interview, the NNPC chairman said about they used about 650. As of yesterday, it closed at 664 at the investors and exporters window, which is now the only official window or the rate that is recognized. So you would see that if we are importing at currently, you look at the parallel market, which we also call there's the inflow dollars at that level where you get is as of yesterday or as of this morning was at 765. So you would see that if we are going to import at 765 compared to the 650 price that we're enjoying now, it means the fuel price would increase. However, we expect that as demand improves, so one thing we need to note is that what has been making that particular market, which inflows, CBN starve of inflow, is because of the policy. Now we looked at in 2020, I think estimate was that remittances in diaspora is about $20 billion. Where have they been going? Nobody wants to bring in money and come and sell and convert at 464. Export proceeds. Most people had made arrangement of where the exports would stay instead of bringing in the dollars, or they find a way of exchanging the dollars at the unofficial market. So these are the things that we'll begin to see. When you also look at foreign portfolio investors and foreign direct investors, it dropped significantly. Looking at last year's number, FPI dropped to about $1.2 billion and FDI about $240 million. So you would see that all those things dried up. So we expect that, yes, while there would be initial pain, and it's also good to know before I wrap up this, is that 80% of Nigerians already have been patronizing the 775 market. So we don't expect prices of imported goods to increase significantly, because most people currently get their dollars at the over 70 naira. That's the unofficial market, the parallel market. So with what we are seeing, we expect that parallel market should even appreciate if CBN backs this policy up with demand, as well as reviewing the exclusive list.
All right. Talking about the black market now, is there a risk, the rates we see in the black market is going to move further away, from this official window, this INE window rate that we have right now. Is there a risk of that happening? And how do we, stop that from happening? Is it by the CBN making sure that there's enough supply of dollars in the market? And what really happens to the BDC market? What happens to that business, really?
Okay, thanks. I think you've even answered
my own
the question, but the supply is key. So, and we know that there are also backlogs. So what I would expect the CBN to do is that they need to be aggressive now clearing the backlogs. Yes, we may not know the true picture of what our reserves are, but with confidence, it will grow over time. Even if it depletes by 10 billion in the next 1 month, once there's confidence, we begin to receive inflows, and that would help boost the reserves. So that supply is critical. If not, we would begin to see that disparity. I also mentioned that there's an exclusive list of our 43 items. Now that it's only one rate, there's no need. If you need dollars for anything, since there's no subsidized dollars, there should be no exclusive list. If the bank is willing to sell to me, I want to buy Euro bonds, for instance, is on the exclusive list. People have to source from the unofficial markets to invest in Euro bonds. So that needs to be done. If not, then there will need to be, they will see that disparity. The long-term fix is trying to work on things that we can begin to export that will generate effects. But in the interim, if we don't back up these policies with follow it up with clearing backlogs, increasing supply, as well as reviewing or even taking out, there's no need for any exclusive list, then we may just be back to maybe from fry pan to fire, if I'll put it that way.
Yeah, definitely a good time to be export, dependent for the country, and finished goods, exportation of finished goods at this point. But what does this mean for government debt? Now we see external debt about $42 billion last I checked, but that was quoted at the old rate, about 463 naira. So with this devaluation and this float right now for the INE, what does it do to government debt, external debts, that is?
Okay, thanks. I think, yes, when we look at it based on the calculation, definitely is really going to increase. So if you have, but because we also earn dollars, I'll believe that it's going to be a netting. If you earn dollars and you have loan in dollars, then you should be paying it with dollars. It means you are hedged. Then the issue of whether exchange rate moves up and down will not bother you. So once we fix also the oil theft and we're able to get more proceeds, the removal of subsidy would also help CBN, NMPC to be remitting more dollars to the CBN. And with that, I think that it would also be able to bridge that gap.
And talking about, the gap right now, what do you think should be the plan of action, to create some kind of buffer? Because this will definitely, impact markets.
Okay, thanks. So for Nigerians, I believe that for most importers, currently they have been importing at the 775 naira to a dollar. For builders, even for trading Euro bonds, most people have been doing businesses at the inflow dollar. So if the CBN is able to back this up with supply at the high and new window, what we should even see is an appreciation of the dollar at the parallel markets, because now it has taken away speculation. PTA, BTA, for all those that run trip, there's no incentive for people to buy and want to resell. So that would close the gap as we progress. So I think that the fix is to follow it up with that supply, such that Nigerians will not feel that impact significantly, because
Right.
if it's not followed up, we'll see that shift in the parallel markets.
And definitely, most people now, that want to buy stuff, online abroad, they've not been able to use their bank cards, to, make some of those purchases. What do you think, happens now? Would Nigerians be able to use their Nigerian bank cards to shop, abroad again, like before we got that disruption?
Yes, definitely. Within a short period, once we begin to see that supply, it all still ties down to supply. The reason why the bank stopped it was because they were not receiving sufficient dollars. And now, once that supply is consistent, most of the banks, because they also want to earn the fees, it's not also for free. The fees on those transactions will be positive for the banks. So I believe that for those that now have dollar-denominated loans, I forgot to mention that, it's going to be negative for them, because if your revenue is in naira and you have borrowed in dollars, it means you need more naira. But overall, what this adjustment has done is it has effectively reduced the demand. If 10 billion the demand was being put down to purchase dollars, it has reduced it by 29%, given that exchange rate. So the purchasing power for those that have been accessing it at the official markets would have reduced significantly.
And let's look at the stock market now. We've seen that bullish trend for a while now. What does this do for foreign portfolio investors? Do we expect them back in the capital market right here in Nigeria?
I think yes. I think we would see them come back to the market if we continue consistency. All these policies even less than 1 week, but consistency is key. If we follow it through, it is expected, because for them, they now know that it's a free market. You can come in anytime, you can go out. If they receive dividend, they can repatriate their dividend, which will be positive for us, because in the last 3 or 4 years, the domestic investors they have been the major driver of this market. And what we're seeing now is by the time they come in, prices would also increase. So we are seeing early bird positioning, especially for local investors, in anticipation that foreign investors would also come to the market, which would mean that for those top stocks that they normally buy, we'll see major price appreciation in those stocks, because fundamentals have still remained very strong. And some of these policies will also give opportunity for most of these companies to also expand as we progress in the medium to long term.
All right, I guess so much to unpack and so much to look out for. Still early days, and we hope this unification process actually carries on along. Thank you so much, Mr. Ayodeji Ebo, MD Optimus by AfriInvest. It was great having your perspective today.
Thank you for having me.